Preparing for a finance and accounting operations at TMF Group interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you want to work at TMF Group. I would position my background around accounting accuracy, process discipline, and client service. TMF Group appeals to me because it supports companies across jurisdictions, so the work combines technical accounting with practical compliance and stakeholder management. I enjoy roles where deadlines matter, documentation must be clean, and small errors can create downstream issues. I also like the idea of learning from different entity structures, local requirements, and international clients, rather than working on one narrow process. While answering, focus on your accounting or finance background, exposure to clients or deadlines, interest in global business services, and why TMF's multi-jurisdictional model appeals to you. Question 2. What do you know about TMF Group and the services it provides? TMF Group is a global provider of administrative and compliance services. It helps companies manage accounting, tax, payroll, legal entity administration, corporate secretarial work, and fund services across different jurisdictions. The key value is local execution with global coordination. For clients, that means they can expand or operate internationally while relying on TMF for statutory compliance, reporting timetables, regulatory filings, and accurate records in each market. Make sure to cover TMF's role in business administration, accounting, tax, payroll, corporate secretarial, fund administration, compliance support, and its importance for companies operating across multiple countries. Question 3. Walk me through a month-end close process for a client entity. Month-end close starts with ensuring all source data is complete. Bank statements, invoices, payroll files, intercompany charges, and supporting schedules. I would post routine transactions, prepare accruals and prepayments, reconcile banks and key balance sheet accounts, then review the profit and loss for unusual movements. After that, I would clear open items or document explanations, prepare management reports, and submit the pack for internal review before sending it to the client. In your answer, talk about transaction posting, bank reconciliations, accruals, prepayments, intercompany entries, variance review, management reporting, statutory considerations, and final review before client delivery. Question 4. Can you explain the difference between an accrual and a prepayment with journal entries? An accrual records an expense before the invoice or cash payment is received, while a prepayment records cash paid before the expense is consumed. For an accrual, I would debit expense and credit accrued liabilities. For a prepayment, I would debit prepaid expense and credit cash, then amortize it by debiting expense and crediting prepaid expense over the benefit period. Both help match costs to the correct accounting period. Be sure to mention matching principle, timing of cash versus expense recognition, typical journal entries, reversal treatment, and how both items affect the balance sheet and profit and loss. Question 5. How would you perform a bank reconciliation, and what differences would you investigate? I would start by matching bank statement transactions to the cash ledger line by line. Cleared items should agree on amount, date, and currency. Differences usually come from outstanding payments, receipts not yet posted, bank charges, interest, FX movements, or duplicate entries. I would prepare a reconciliation schedule showing the adjusted bank and book balances, then investigate aged or unusual items, and post correcting journals only with proper supporting documentation. While answering, focus on comparing bank statements to ledger balances, identifying timing differences, bank fees, unposted receipts, outstanding payments, duplicate postings, foreign exchange differences, and supporting evidence. Question 6. If you were supporting fund administration, how would you explain the NAV calculation process? NAV is the fund's net asset value, assets minus liabilities, usually calculated per share or unit. The process includes valuing investments, booking income, accruing expenses and management fees, reconciling cash and positions, and reflecting subscriptions or redemptions. Once total net assets are finalized, they are divided by units or shares outstanding. The important part is control. Every material figure should tie back to source data, valuation support, or approved calculations. Make sure to cover asset valuation, liabilities, income and expense accruals, investor capital activity, fees, reconciliations, NAV per share or unit, and review controls before release. Question 7. How do you manage multiple client deadlines at the same time? I manage deadlines by converting them into a tracker with due dates, dependencies, responsible parties, and status. I prioritize statutory deadlines, client-critical reports, and items with external dependencies first. If information is missing, I follow up early rather than waiting until the deadline. I also escalate blockers with facts, not emotion. The goal is to avoid surprises. Clients and managers should know what is complete, what is pending, and what risk remains. In your answer, talk about prioritization by due date and risk, using trackers, communicating early, escalating blockers, documenting status, and balancing speed with accuracy. Question 8. Why are KYC and AML procedures important in a company like TMF Group? KYC and AML procedures protect the firm from facilitating illegal activity or working with unsuitable clients. In a business like TMF, client entities may operate across countries, so understanding ownership, control, source of funds, and sanctions exposure is essential. Strong onboarding also supports regulatory compliance and audit defensibility. I would treat KYC as more than a checklist. Incomplete documentation or unclear beneficial ownership can create serious legal, financial, and reputational risk. Be sure to mention client onboarding, beneficial ownership, regulatory risk, sanctions screening, source of funds, ongoing monitoring, documentation quality, and protecting both TMF and its clients. Question 9. How would you investigate an intercompany mismatch between two related entities? I would first confirm both entities are comparing the same reporting date, currency, and account mapping. Then I would match transactions by invoice, recharge reference, or journal ID. Common causes are timing differences, FX rates, one-sided postings, tax treatment, or different cutoff dates. Once identified, I would agree the correction with both sides and document the support. For consolidation, unresolved intercompany mismatches and distort eliminations, so they need tight follow-up. While answering, focus on matching counterparty balances, transaction-level comparison, timing differences, currency translation, invoices and recharge agreements, eliminations, and agreeing corrections with both entity teams. Question 10. What is your understanding of international financial reporting standards versus local, generally accepted accounting principles in financial reporting? International financial reporting standards provides a common global reporting framework, while local, generally accepted accounting principles reflects country-specific accounting rules and statutory requirements. The same transaction can sometimes be measured, classified, or disclosed differently under each framework. In a TMF-style environment, I would first confirm the reporting basis required for the entity: management reporting, statutory accounts, tax filing, or group consolidation. Then I would apply the correct accounting policy and keep clear documentation for review. Make sure to cover that International Financial Reporting Standards is a global reporting framework. Local generally accepted accounting principles is jurisdiction-specific, and differences affect recognition, measurement, disclosure, and TMF must follow client and statutory requirements. Question 11. How would you approach VAT, GST, or withholding tax compliance for a client? I would start by understanding the transaction type, jurisdiction, vendor or customer location, and applicable tax treatment. Then I would ensure invoices have the required details, correct tax codes are applied, and ledger balances reconciled to the return. Filing deadlines and payment dates need to be tracked closely because penalties can arise even when amounts are small. If the issue is technical or cross-border, I would escalate to a tax specialist rather than guess. In your answer, talk about understanding transaction nature, tax codes, invoice validation, filing deadlines, reconciliations to ledger, supporting documentation, local rules, and escalation to tax specialists when needed. Question 12. What would you do if you discovered an accounting error after a report had already been sent to the client? I would not hide it or quietly adjust the next report. First, I would quantify the error and understand whether it is material. Then I would inform my manager with the facts: what happened, which reports are affected, the financial impact, and the proposed correction. If needed, we would issue a revised report or client explanation. Afterward, I would identify the control gap, such as missing review or source mismatch, and fix the process. Be sure to mention assessing materiality, identifying root cause, notifying the manager promptly, preparing corrected numbers, documenting impact, communicating transparently, and strengthening controls to prevent recurrence. Question 13. What Excel skills do you use in accounting or finance operations? For accounting work, I use Excel mainly to reconcile, analyze, and control data. Pivot tables help summarize transactions by account, entity, vendor, or month. XLOOKUP, SUMIFs, and IF formulas are useful for matching and exception checks. I also use conditional formatting to flag duplicates or variances. Just as important, I review formulas, lock key cells when needed, and keep source data separate from calculations so the file remains auditable. While answering, focus on practical Excel usage: pivot tables, lookups, SUMIFs, reconciliations, data validation, conditional formatting, basic controls, reviewing formulas, and avoiding manual errors. Question 14. How do you communicate with clients, auditors, or internal teams when information is missing? I try to make requests specific and easy to act on. Instead of saying, "Please send support," I would list the exact invoice, bank statement, agreement, or approval needed, with the reporting period and deadline. I also explain why it matters, especially if it affects filing or reporting timelines. If there is no response, I follow up through an issue log and escalate early. Clear communication prevents last-minute pressure and rework. Make sure to cover clear requests, deadlines, context, professional tone, follow-up discipline, issue logs, escalation, and adapting communication style for clients, auditors, and internal reviewers. Question 15. Describe a time you worked under pressure and still maintained accuracy. I would answer with a concrete example, such as closing several entities while waiting for late bank data. Under pressure, I break the work into critical and non-critical items, complete what can be finalized, and keep a checklist for open points. I also build in a review step, even if it is short, because speed without accuracy creates rework. The strongest answer shows the deadline was met and the numbers were reliable. In your answer, use a structured example with situation, task, action, and result. Emphasize prioritization, review checks, communication, documentation, and how you avoided sacrificing quality for speed. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.